it comes to investing in the Asia-Pacific region, our next guest says Asia is bigger than China. Taizo Ishida is a portfolio manager at the Matthews International Capital Management Fund. It has $16 billion in assets. He's the lead manager, I should say, of the Matthews Asia-Pacific Fund, which has outperformed 97% of its peers so far this year. Taizo joining us from our bureau in San Francisco. So let's talk sort of about the broader issues first here, Taizo. Obviously, the president of the U.S. meeting with a lot of Asian leaders over the past several days. He's having lunch with a group of Southeast Asian leaders. Is that really the area of the region where investors should be looking right now?
Yes, Julie. I think last few years, investors really focused on China. But what happened this year, I think smaller markets in Asia, namely Indonesia, Malaysia, Thailand, or even Philippines, their market has done so well compared to China, Taiwan, even Korea, Japan this year. I think what's been going on is there lots of value existed in the beginning of the year, and people finding those cheap value yet growth companies in the region, and I'm doing exact same thing. So I like Indonesia and Thailand. Those are small markets.
And it's also interesting, a lot of people have talked about, whether it's with China or some of these other nations, the rising middle class in Asia and the effect that that's going to have on the economies. Talk to us a little bit about how that plays out in some of the countries you mentioned.
Well, I guess, going back to 1997 Asian crisis, Asia came a long way 13 years after that. Southeast Asia was sort of backstage of India, China for the last 4 or 5 years. Yeah, the economy actually very interestingly grew. And this year, I think they are doing more than 6-7% of type of economy. I myself went back to Indonesia just a couple months ago, and I was really impressed with what's going on in the economy. People look a little happier than, say, 10 years ago. Infrastructure a little better. Still has problems, but I think overall, economy and life of the average people are rising. And you can see that in the first hand, middle class is actually rising all over Asia.
We are back now with Taizo Ishida. He's a portfolio manager at the Matthews International Capital Management, $16 billion in assets overall. He manages the Asia-Pacific Fund. Taizo, we were talking about the rising middle class in much of Asia. We talked about decoupling a lot in the past decade. That talk kind of went away. But is that really what's happening now? I mean, the economy, as you well know, in the U.S. has been sort of bumping along, even as it's been quite strong in the regions you're talking about. Do we indeed have decoupling now?
Well, that's a good question, and we're always asking that. But I think Asia is now 1/3 of a global economy and rising pretty quickly. But if you look at the U.S., Europe, and rest of the Asia, it's a big part of the whole global economy. So I just can't think it's safe to say you can do decoupling, because Asia itself is great by itself. Domestic consumption is rising, but without that trade with the U.S. and Europe, I don't think the future is not as good as the today. So I don't say the decoupling is happening. I think it's less and less, say compared to 10 years ago. Not depending on the U.S. alone, they do have their own domestic vehicle to go along. But I think it's too far. Just away from decoupling, and I don't think that's going to happen in any case.
I quickly want to ask you about one of your picks here, and it's sort of an example of the kind of stocks that you look at. Sysmex Corporation. This is a company that makes equipment for medical testing. And what's interesting here is that it doesn't just have exposure in Asia. It does have global exposure. Is that one of the reasons and one of the criteria you look at for companies, even if they are based in that region?
Right. The Japanese company doing well in Europe and the U.S. for many years. And as a matter of fact, the company has been in China since 1979, so it's been 30 years existence. And what's exciting this company is, I think, my excitement over Chinese healthcare sector in general. The Chinese don't spend much money on the medical spending. They spend about $200 per capita. and where the U.S. Americans spend typically $6,500 per capita. It's a huge gap between that spending. But what the exciting is the Chinese government realized this, and they've been putting a lot of money in this healthcare reform. And for example, they put the $125 billion starting from last year, 3 years reform, 09, 010, 011, to just beef up the medical infrastructure. And the bulk of the money is going to medical insurance. And this is a key because, as you can imagine, U.S. spends so much money on the medical insurance where China is not. And this is going to really give many Chinese to have access to local hospitals, clinics to get check their physical conditions. And in China today, because of lifestyle change, their disease is pretty much the same with Americans. They have cancers and diabetes and cardiovascular disease all over the place. So it's very important, and this is going to help actually consumption in general, because the reason why Chinese don't spend much money in consumption is because they have to spend so much money on the medical expenses. It's about 50% of the money going out of pocket, as opposed to U.S. only 10%. So this is going to be a big sector in my portfolio, and this very secular, sustainable growth going forward. So this is very exciting within the Chinese universe.
Okay, thank you so much, Taizo Ishida. And I see you have about 9.5% or so healthcare in that portfolio. So obviously a big play on this sector. Thanks a lot for your time. Appreciate it. Again, Taizo Ishida of the Matthews Asia Pacific Fund.